Hello and welcome to the latest edition of the Sharesify podcast. Now, I should say, you lucky people, this is the second podcast we've done today because earlier we had the great pleasure of interviewing Anthony Lynch, one of the managers of the JP Morgan Claverhouse Investment Trust. Now, Claverhouse is an AIC dividend hero, which means it has more than 20 years of uninterrupted increases in the payout. In fact, Claverhouse has increased its dividend an unbroken 53 years. So this is well worth a watch. Anthony has a wealth of experience as an income manager and as a small cap specialist. And the trust is going to release its results for the full year next week. We think on the 25th, Wednesday the 25th. So keep an eye out for that and make sure you watch an earlier podcast. Anyway, Steve, back to the markets. What a difference a day makes.
Yeah, it does, doesn't it? It's just bonkers, isn't it? I mean, the market is all over the place. Both global markets in general. I mean, they're shooting up, they're shooting down, and it's all to do with, of course, what's going on in the Middle East, and the rhetoric seems to be for a longer conflict, a shorter conflict, and of course the ripple effects are being felt across markets, across oil markets, across gold prices. So it's just a case of ride by the seat of your pants at the moment.
Yeah, I mean, we were talking on Wednesday. Markets were happy; they were up a couple of percent. We'd forgotten about energy. We were looking at tech hardware stocks, weren't we? And then, of course, this major energy infrastructure strike. The International Energy Agency is saying this is the largest supply disruption in the history of the oil market.
Yeah.
And it's advising us all to drive slower, fly less, and work from home.
Yeah.
Works for me.
I tell you, one interesting thing strikes me is it's just purely circumstantial. But can you imagine if we was in this position going into, say, October, where you've got the big Northern Hemisphere heating season coming up, and we're walking into obviously our summer now. So the demand is going to be relatively low relative to, say, December, January, February. So in many ways, I mean, our household bills hopefully won't be as bumpy over the next few months. But I think we're in many ways fortunate that it's happening now rather than happening in September, October.
Yeah, because we're all big importers, the UK and continental Europe, big importers of liquefied natural gas. And, although renewables are taking a growing share of the market, you've had German baseload power prices have had to go up because of this. And that's going to affect manufacturing, it will affect manufacturing across Europe.
And it's just worth pointing out to listeners as well. I mean, I'm sure they're more than aware, but I mean, we live in a world where we're still so reliant on oil and oil-based products. And as much as new energy is trying to replace that reliance, it's still so important. So if you consider over the last month, the price of Brent crude has gone up by about 50%. Now, that is an enormous impact it's going to have onto economies. And that's why central bankers, we talked about this on Wednesday, central bankers are all looking at sitting on their hands because they don't know what that's going to do to inflation. And inflation needs to be kept under control. So don't expect any cuts to interest rates anytime soon is the key message.
No, and this is the problem, actually. Yeah, interest rate expectations. I mean, here we might have been looking at a cut, maybe two by the end of the year. Now they're actually thinking maybe the Bank of England might have to raise. You saw that in the market as well. Unsurprisingly, BP and SHEL flew yesterday, but the stocks that got really hammered were Barratt Redrow, Persimmon, Vistry, NatWest. NatWest was down 7%. And the problem is that because interest rate futures are going up, that means that mortgage rates are going to have to go. Already people have been, when this conflict started, a lot of the lenders started to withdraw their cheaper offers. And already the price of, or the average mortgage deposit needed now is somewhere in the region of 40 grand. Well, that's about the average national wage.
Yeah.
So no wonder house builders are struggling with that. What else? What have you seen, James? What's grabbed you?
Yeah, well, one of the big stories obviously being Unilever. So it's in talks to sell its foods business to spices and sauces maker McCormick. So Unilever's food business might include Hellmann's, Marmite and Knorr, but it's non-core by management considered.
Right.
Yeah, so a multi-billion-dollar sale that would complete Unilever's pivot to the higher growth, higher margin beauty and personal care categories. Yeah, another company that's slimming down, which is quite interesting, is the Works, which has decided to give up the ghost on its online operations, and I guess selling those kind of small ticket arts and crafts, games and toys hasn't proved profitable online, so they decided to just focus on the stores business.
Yeah,
Yeah,
I mean that sounds a bit worrying to me, I have to say.
I gather also though, James, they had an issue with their suppliers basically let them down.
Yeah, two separate fulfillment partners sort of let them down, so they'd a really torrid 2 years for the online piece, but now they're just focusing on the profitable part of the business, which is stores,
The
500
stores
plus stores.
themselves.
Yeah, indeed.
Yeah.
But of
Steve,
course, they
Micron.
have to carry all that additional cost though of running, carrying rents, carrying extra staff costs, and so
Mm,
on. I mean, so
Yeah, true.
it's very rare that you're seeing a business back away from e-commerce for traditional bricks and mortar commerce.
yeah. Steve, I was going to mention Micron because we were looking forward to that on Wednesday, weren't we? And the numbers weren't bad at all.
No, they were really pretty impressive, to be honest. But we've talked about this over the last couple of months, Ian. It's about expectations management and big spending, big capex spending. So we've seen big capex budgets across all the big cloud providers and AI investment, etc. Well, Micron upped its own capex by about 25%, so from about 20 billion to 25 billion this current year, and that seemed to kind of unsettle investors a bit. Now you've got to remember that AI, all the growth stats are going gangbusters, right? So
Mm,
demand is way outstripping supply. So pricing is very, very firm. But of course, the chip market is notoriously cyclical. It's always been tied to a pretty much the economic cycle. They have slowdowns, then they have speed ups, then they have slowdowns. Now at the moment, because there's so much money going into AI-based stuff and memory, which is what Micron does so well, you're just seeing investors being asked to, is it no longer cyclical? And that's an unanswered question at this point
yeah,
in time. We
of
don't know where we're
course.
going to be 2 years from now. Will it return to normal, or is this a new paradigm shift?
Yeah, yeah. Now, here's interesting. We're starting to see IPOs come back. I got an email dropped in my inbox this morning. I think you might have got it too, James. Vista Parks is coming to the market 31st of March, I think. There's a retail offering. Now, this is a residential and holiday park business targeting the 60 plus market. So it's the kind of saga market. If you want to downsize your house and move to a residential park, these are the guys to talk to apparently. So an interesting one. What else we got to look forward to next week then, James?
Well, it's another big week for retail, isn't it, Ian? So we've got Kingfisher, which is your B&Q and Screwfix owner. Can that company raise guidance again and do a Wix? Because a good beat and raise from Wix earlier in the week. And
Yeah,
then
yeah,
one retailer that very much is making online work is Next. So I guess investors will be wondering, can they pull another rabbit from the hat and upgrade guidance again? They're notoriously conservative with guidance, so we'll see what happens with that one on
yeah.
later in the week.
What's on your radar, Steve? Anything?
Well, I mean, it's starting to quieten down now, realistically. I mean, the sort of the US earnings season has largely passed now for
Mm,
the latest one. So we're just really waiting, I suppose, for March year ends to start coming through. And that's going to take a few weeks. So ultimately, it's a bit patchy. One company that did stand out to me, though, is a company called Cintas. Now, I don't know if that many UK investors will be familiar with it. It's one of your, like you mentioned, diploma the other day about dull but kind of desirable,
reassuringly
very
dull.
high
Yeah,
quality but pretty dull. Well, Cintas is exactly the same kind of business, dull but desirable. It's got an absolutely cracking record. And I remember talking to a fund manager many years ago. He introduced me to the company, and he was using it as an example of the company's brilliant, ticks all of their high quality metrics, but never seemed to be at the right kind of price. Always looked a bit
mm,
frothy, and it's on a P of about 40 times, so it's still frothy. But this fund manager was explaining to me the price has just kept going up and up and up.
yeah,
So they were hoping to get that little dip where they could dive in, and they never got that opportunity, so he never invested in the business, and it's just gone cranking on dividends, cash flows, growth. It's got everything, and this is just basically working in. It supplies uniforms for workers. It supplies cleaning for work for industrials and businesses. It's all about making workplaces sort of cleaner, safer, and more professional. So a real dull business, but a brilliant opportunity for a quiet company that goes about its business very quietly and just keeps generating returns for investors.
Brilliant. Well, hey, we look forward to that then. That about wraps it up, I think, doesn't it, chaps?
Yeah, I think that's covered everything.
Well, if you've enjoyed this, please press the like button. Make sure you follow us on YouTube and your whatever podcast platform you listen to. If you want to get involved with this, and particularly if, like JP Morgan Claver House, you're a trust, or if you're a fund and you'd like to come on the show and get your message across to the retail audience, just email us at editorial@sharesify.com and we'll do the rest. And with that, have a good weekend.
Cheerio, everyone.